Whenever there's a major natural disaster that leaves millions of Americans stuck without electricity, people all over the country rush to buy their own gas-powered generators. It happens like clockwork, and the latest hurricanes were no different. Which brings me to Briggs and Stratton, BGG. This is a quintessential American manufacturer that makes gasoline engines for outdoor power equipment, along with their own pressure washers, snow blowers, and you guessed it, small power generators designed for consumers. Last night, Briggs and Stratton reported a blowout quarter, but initially the market had trouble processing the numbers because people couldn't tell how much of the beat was driven by long-term strength and how much was a temporary boost courtesy of Harvey and Irma. It was a nice top and bottom line beat. Company lost 27 cents a share. Analysts were looking for a 34-cent loss. Its revenue came in much higher than expected. That's what matters. Key metric, up 14.7% year over year. Even better, management raised their full-year guidance for the top and bottom line. Still, some investors were concerned because disaster-related generator sales are not sustainable. This stock spiked after Hurricane Sandy left huge swaths of the New York metro area without power for weeks. But a year later, it had given up all those gains. After the conference call, though, it seemed clear that in addition to the generator business, Briggs and Stratton also had some nice momentum in engines and other products geared toward commercial customers. Meanwhile, there might be more to this than just reaction to a couple of really bad storms. That's why the stock only jumped nearly 7% today. Let's check in with Todd Teske. He's the chairman and CEO of Briggs and Stratton, find out more about the quarter and the company's long-term trajectory. Mr. Teske, welcome back to Mad Money.
Great to be here, Jim. Thanks.
Okay, so let me ask you something. I think that there has been a secular change, that people just accept the fact that there are going to be storms and that there's going to be a buying pattern that is different from Sandy. It may not tail off. But is that too rosy a view?
Well, you know, Jim, when you look at power outages and you look at the 2 and 3 hurricanes that happened recently, there are a lot of people that were without power, and it really creates a discontinuity in lifestyle. And so what people are looking for is to kind of get back to life as it was. And so, you know, for these couple of storms, these 3 storms, our team did a great job of mobilizing, getting these generators where they needed to be, and ultimately helped a lot of these people that really needed it. While at the same time, and you mentioned it in your intro, I think some of the investment thesis out there is now on the commercial side. And so we saw really strong commercial sales in things like job site and engines this quarter. And so I think what you've seen is just people kind of figuring out that this is a different company than we used to be.
Well, speaking of different company, I mean, you're doing, you spent a lot of time in your conference call talking about InfoHub and that it may be a differentiator. This doesn't sound like it's for show. It's something that for commercial, it's really vital.
Well, it is, and InfoHub is really kind of our version of Internet of Things, and so it comes back to connected product. And so initially we launched it in our commercial turf business where people cut lawns for a living. And one of the things that we always understand is that labor is a valuable resource for these cutters, and if we can make their teams more efficient and more effective, that's what InfoHub is going to do. So it's going to help cutters understand where their crews are and how long it takes them to do their jobs, cut the lawns and things like that. And so what it's going to do is going to provide a platform now across other types of products where we can ultimately provide information to people who run businesses to make them more efficient, more productive.
Now, is this something that the customers demanded, or is this something that your research and development team said, wow, you know what, this could really be a differentiator versus other companies?
It's really more of the R&D team and our product development team ultimately saying, what is it? How can we help cutters become more productive? How can we help commercial users become more productive? And so they weren't necessarily asking for it. We had it in development for about 2 years. And the feedback that we got once we showed it to the field was pretty remarkable, actually, and now resulted in this product offering that last week at our trade show was just probably the #1 hit of the show.
That's fabulous. All right, Todd, you've got a terrific deck on page 8. It has a page that I want to talk about because it's not the way we thought about the country even 10 years ago. It says, made in the USA, competitive advantage, 85% of workforce located in the USA, clear value to our customer base. There was a while when we felt, you know what, if it's made in the USA, maybe not so good. What's changed? How come that you and I both know that this is incredibly important?
Well, Jim, we never left. I mean, we were always here in the U.S., and it was important to be close to the market. And what we did over time was we were able to balance kind of capital with labor cost. And so here recently, over the last few years, it's really been all about automation. And so we have more robots in one manufacturing cell than we had in the whole company when I joined 21 years ago. And so when you look at the ability to provide tools to employees to make them more productive, we can be competitive here in the U.S. Now, it also creates a bit of an issue because ultimately you get into skilled labor issues. And so you need people that can program and run the robots and maintain the robots. And so what we've been focused on is how do we train up our people to be able to use a lot of this automation and this innovation that we're bringing to the shop floor so that we can remain competitive here in the U.S. And so it's been really good. Our team has done a really great job.
Now, I don't see much west of the Mississippi when I look at the map. I mean, do you need more capacity, say, near California, West Texas, anything like that?
Well, when you look at really where we produce, it's near a lot of the major markets that we serve. So, for example, in lawn and garden, most of the country, most of the market is east of the Mississippi, and so a lot of our OEM customers are there, as well as a lot of the commercial cutters. We can use logistics, obviously, to get the product where it needs to be throughout the country, but that's really why we're located where we're located, to be near where the major markets are.
Got it. Okay, thank you so much. Great quarter, great job. Todd Teskey's the chairman and CEO of Briggs and Stratton. This is just one of those great, unique American companies. If you're looking for something to put away because they're the best at it, Briggs and Stratton. Mad Money Spectre. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.